Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 10th of November. So I've seen some very good moves this week. The key levels that we were talking about last Friday all held their own, and we saw big rebounds off them. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD. And you can see here that 65-cent mark did get hit on Friday. We can see here the big move happened, hit the roll reversal zone, which we know was very strong. It had very strong support through here, and obviously very strong resistance right through here. These wicks were very important, and you can see two big rejections there. So no real surprise to see that sell-off. Yes, news was a little bit involved, but yeah, it always is on a Friday. So yeah, we're not going to be really surprised by that. The technicals held up very well. So that was really good trading there. Hopefully you're able to take advantage of that. What I love about these levels is they are remotely, obviously that you can see them in advance, but when you go to the smaller time frames, like say a 1 hour or even a 15-minute chart, if you're trading that particular session, you do get the entry points. You can see here we were already rolling over on the 1 hour chart. You can see quite through there on Monday, we started to roll over. Then we had the big rejection, came up, touched the 20 moving average and that zone again, and down it came. Hit the 20 moving average, down it came again, hit the 20 moving average, and then down it came again. It's so repetitive, and it makes it very easy to get hold of. So even though it looks like a big exaggerated move on the bigger charts, you can get involved. Even here on the 15-minute chart, you can see, got to go a fair bit back to actually see the whole move, but you can see that look how many times it touched the 15-minute moving average and then fell, then rebounded and touched it again and fell. And you can see the next wave down did the same thing. A series of lower highs and lower lows. What we talk about every single week, very predictable trading. So hopefully you were able to get a good portion of that move, because it was a very good one. What it does from here, it's going to find relatively reasonable support at this point because of these wicks. All right, so we can see here we've got a series of, this is a daily candle again now, so we're talking about a whole week's worth of action around this zone, around that sort of 63.50-ish area. Okay, so we would probably find a little bit of support around this level, maybe a little bit of a rebound, but if it does continue the heavy sell-off and it does continue to fall throughout today's session, and we're trading below this level on Monday, if we're not already there, that 62.90 is probably the place it's going to go. And if we are to get a rebound from this point onwards, I would be expecting probably that sort of 64.50 area would be the first point of call. All this congestion right through there. And then, of course, if it really starts to push up higher, that 65-cent mark is going to be the level it's going to go to. More than likely, we'll gravitate to that zone, but that's a pretty big sell-off. That'd be a 61.82 of the fib as well. So if it's going to rebound, this is probably the place you'll find support. But if it does continue to sell down, the obvious level is going to be that 62.80. But good trading, and well done to everyone who got that one. The CAD gave us a very similar story in the sense that it landed right on support. You know, where we were talking about it last week is right here, right at the very strong support zone of 136.50. We know there's very good resistance right through there, so we expected the support to be there, and it certainly did. Gave us a really good rebounded move. Look, it's traveled up even higher than the Aussies move, really, if you look at it pound for pound. And yeah, it may well hit the top before it even pulls back. So it's one of those ones where, again, if you go to the smaller time frames, you're going to see a sequence of opportunities to get in. Here's the 1 hour time frame, series of higher highs and higher lows all the way through. 15-minute will give you the same trades, as you can see right through there. Absolute trading bonanza. If you were scalping the US dollar CAD on a 15-minute chart off that rebounded zone, I think you've got about 20 entries. You could have basically entered on every single one of these moving average touches of the 20 and the 50 all the way up. Okay, so that's why it's so important to go through the time frames. When you know you've got your level set, you've got a good idea of where the market's going. All you've got to do is jump on board on the pullbacks that you're looking for. So pretty straightforward trading. I know a lot of people got that too, because I got a lot of emails saying they made some good money on the CAD. So that's awesome to hear, because it was a very good zone to bounce off. Where it goes to from here, look, it may continue to get up to the 138.50, but if it starts to roll over and fail here, I'd be looking at support at about the 20 moving average and that roll reversal zones there. So that's probably the area it'll pull back to if it does pull back. And if it doesn't continue the strength, the 138.50 would be the likely target. That's what I'd be aiming for on that one. All right, US dollar yen. Same deal in the sense that it certainly found strength where it needed to find strength. It was the last line of defense at this zone. It didn't want to go any lower. We knew that, and we certainly didn't want to break below this level here, and it didn't. It did the right thing and started to track up, and it's back again over the resistance at 150 and trying to push up to recent highs, which is around that 150, 180 area. Look, it's looking very strong at the moment in terms of bodies. You can see there's hardly any wicks there at all. The bodies are very, very strong. And what I'd be probably looking for in this, if you are scalping this one, I'd be looking for probably little mini pullbacks on the smaller time frame. Maybe look at taking profit at the highs, but there's not a lot of range there really. If it starts to roll over and starts to look weak again, the obvious level is going to be that 150.20 level, the 150 to 150.20. That's the level I'd be looking for it to pull back. If it gets there, then that's pretty comfortable. I don't know if I'm looking at shorts after that. If it's trading below that level on Monday, it's a different story altogether. Then we're going to start targeting that one sort of 149 to 149.20 area. But if it's trading above that 150.20 or even higher than the 150, 180, it's going to look pretty strong for the week ahead. So realistically, where it ends up, I expect it's probably going to be somewhere in the middle, and I'd be trading that zone until it does either a break above 151.80 or a break below the 150.20. So trade inside that zone, probably scalp between those two lines, and you should be good to go for the yen. It's pretty good trading on it, but keep it relatively short until it breaks either side, and then we'll get some good direction on that one. Dollar index, it bounced off the level here at the 105 as well. The euro is obviously the one we're going to be looking at more closely because it's the one that we trade after the analysis on this one, of course. But look, yeah, it's done what we probably would have wanted it to do. It found support where it needed to find support, pushing up to the 20 moving average. So it's got a few issues in front of it now. 20 moving average is there. Its move isn't exaggerated as everything else. So I'd be probably mindful that the 20 moving average may halt this one at around that 106 level. But it found support where it needed to find support. Let's go to the euro. This is the one we're going to look at the trading opportunities on, of course. It hit and broke through the resistance zone. We know we had support there and support through there. So resistance role reversal area was around that sort of 107 area, broke through, but has come down. Its wick action has been interesting at this level. We've got three very big wick candles there, which is very indecisive what the market really wants to do. And it may well find support here. I'm not totally convinced just yet that this is going to sell off. This is probably, of all the ones that found their levels, this is the one that I'd be more nervous about shorting. I'd be probably looking for, potential strength here. The dollar index looks fairly strong. The 20 moving average is trying to catch up, and you can see that that bridge is starting to get caught up now. And we do have a series of higher highs and higher lows. So, for the moment, this downtrend has been arrested by a change in trend to an uptrend on the daily. So it may be just parking here for support. It's not a massive pullback, and there is support here at that 106 sort of 50 to 80 area. So I'd be looking for a bit of a reversal here. A smaller time frame series of higher highs and higher lows might get you in, and then look for opportunities to trade it back up to that sort of 107.50 area, which is the previous high that we can see through there. If it continues to sell and breaks down and is trading below the 20 moving average on Monday, then I'd be looking for that weakness to continue probably into next week and look for opportunities down to around that 105.80 area, which is the middle of this zone. But really, you give it the benefit of the doubt, it's looking stronger than it is weaker at the moment. And the S&P 500. So this has had a bit of a sell-off, especially towards the end of the session. The end of the session is really what has smashed it down, as you can see. It hit the zones. The 1 hour is about to give us a 2050 cross, which has happened very, very quickly, only in a matter of hours, of course. It's been interesting. Look, it's been a very, very big run without a pullback. Okay, so it's no real surprise to see it pull back from here. There was obvious resistance at that point. The 103.80 to the 43.80 to 4400 level was an obvious area of support. So resistance, because it was support over here. So no real surprises to see it find trouble at that zone. And a bit of a pullback will probably be healthy, really. So I'd be, looking at this and giving it the benefit of the doubt, a bit like the euro. I'd expect it to find some sort of support around these moving averages. If it doesn't find support exactly where it is now, it could find it at the 20 and the 50 moving average, and that would be okay, because that would be a pullback to about a 38.2 fib of that move. That would be perfectly fine and still giving us a potential inverse head and shoulders pattern that we can work on towards the end of the year. So hopefully that is how it plays out, because that would set us up for some pretty good moves long. But in saying that, it wouldn't want to be lower than the 20 moving average either, right? So we're expecting the 20 and the 50 moving average to hold up. If that holds up okay, that'd be great. If it starts to turn around from this point onwards and starts to give us a series of higher highs and higher lows, then we'd be looking for a move back up to that potential neckline of that head and shoulders, which is around the 44.40 area. So if it's trading below the 20 moving average after the weekend, look for potential weakness to continue down to around that 42.50 area. But if it's above the 20 to 50 moving average and hovering in this zone, I'd be looking for potential moves up in the medium to short term to get it back up to around that 4,400 and 44.40 level. So really good trading. Hopefully you're able to take some of those moves of this week, because I think they were really good and very in line with what we were talking about last week. I hope you have a fantastic weekend, and I look forward to seeing you all next week.